This video is sponsored by Real Vision.
Years ago, everybody wanted to be known as a tech stock, but few actually were. Now that trend is kind of reversed. Today, every company is referred to as a tech stock because I guess technically they all do use technology, but do they really deserve the label of tech stock? Today, we're going to talk about how we may see a huge unwind of that tech stock label in the stock market. And it's all going down on this week's episode of Real Vision's The One Thing. What's going on, investors? AK here. For years now, the market has been led by tech stocks. And now, as we've seen a breakdown in a few key tech stocks, we've seen it bring the market lower. You can see of this chart of Amazon and the S&P how closely tied their moves are. Dan Russo, the chief market strategist at Chaikin Analytics, had this to say about tech stocks when he joined us on Real Vision for a recent interview.
One of the sectors that I think gets a lot of attention, and for good reason, because it's roughly 20% of the market, is the technology sector. And a lot of people like to talk about, is tech bullish, is tech bearish? I get the question all the time, are you bullish on tech? What do you think of tech? And I think investors do themselves a real disservice by kind of looking at it that way, because it is such a broad sector, it is such an important sector, but there are a lot of dynamics at play within quote unquote technology, product cycles and innovation. I think it really makes sense to drill down to the industry levels.
As Dan said, it pays to drill down instead of taking all tech stocks together. We talked about this same thing last week when we were discussing emerging markets, and this same type of grouping happens in the FAANG stocks. Probably the biggest sign that we've reached tech stock saturation was the creation of a FAANG future. And really, other than being massive companies with huge revenues, what do these tech stocks really have in common? Okay, so sure, they have websites and apps, but so does my local dog walker. Does that make her a tech startup? I mean, does Netflix, which everyone loves, really want to be grouped with Facebook, which people are just hating on right now because of the way they abuse user information? David Keller, the president of Sierra Alpha Research, was on Real Vision recently talking about how these two stocks have separated.
So you mentioned Apple, you think of Facebook, some of these other names that, the FAANG trade was the trade for a period of time. That's sort of separated, and you have a real differentiation within the FAANG space. So you have some Facebook looking weaker, you have some, maybe Netflix potentially breaking out a little bit. So there's really a differentiation, and I think with those big technology stocks, Apple in particular, you've seen it not participate when others have really appreciated.
So we know tech stocks are important, and we know how key it is to drill down into the sector. But there are some things that you should also be watching to get a clue of the overall health of tech stocks. Because where tech goes, so does the market. IT is the largest subsection of the market and makes up almost over 20% of all stocks. And that percent peaked in August of 2018 when it reached almost 27%. Which was near the market top. Now, as the world rotates, so do sectors. So as investors keep getting more defensive, the technology makeup of the S&P will decrease. Here's David Keller again explaining why he thinks different sectors will do well.
For me, the short tech call is a mix of technical inputs, and it's on the tech sector in particular, some of the larger technology names, but I say it's also a macro call. Part of it is where we're at in the cycle. We're at the point where you'd expect late cycle leadership like the MEI sectors, materials, energy, those types of names. Maybe more defensive groups like utilities, which are starting to break out a little bit. So from a macro perspective, it's sort of the time in a continued bear market where you'd expect some technology weakness.
Obviously, it pays to watch the tech sector, so David also broke down the signals that he uses. Here's what he had to say about the relative strength of the tech ETF XLK.
For me, the most important thing with the XLK is the RSI value. So if you think about RSI, it measures the overall momentum. And right now, it's sort of in the bearish configuration. And when the RSI remains below 60, that tells you that we're in a bearish configuration. If the RSI would break above 60 on a new upswing, that would tell me that the XLK bearish call might need to be revisited for sure.
We'll be watching these stocks really closely in the upcoming weeks and months because they're the ones that are going to determine where the market is going in 2019. If you want to do that with us, then make sure you subscribe to Real Vision. I'll talk to you next week.